Hi everybody, Mike Jones here with the realestatestation.tv. You know, when I meet people, generally the topic of conversation tends to roll towards real estate, and a lot of times people ask me, is it better to rent or is it better to buy a home? And to tell you the truth, housing affordability is at an all-time high. At least it is as far back as I can remember, and it's definitely better to buy now, and here's why. Take for instance the average rent here in Northeast Florida, Jacksonville, Orange Park, Jacksonville Beaches for a typical 3-bedroom, 2-bathroom house or an apartment is anywhere from what, $1,000 to $1,200 a month. So figure that in. Let's just say in the average or the median sales price of a home in Jacksonville is about $134. But to make the math easy, I'm going to use an example of a purchase price or a house of $150,000. And by the way, there's about 2,000 homes and condos on the market right now, but between $100,000 and $150,000. So if we get a house for $150,000 and you go FHA, FHA only requires you to put down 3.5%. That's $5,250. Okay? National average for a mortgage, 30-year fixed rate mortgage right now is 3.94%, and that is a record low as far as national averages go. 3.94% on a, if you put down $5,250, that leaves you $144,750 as your loan amount. You're looking at a payment, principal and interest of about $687 a month. That's at 3.94% on a 30-year fixed. Okay, $687. You throw in your taxes. I'm estimating your monthly taxes to be about $153 a month. That's if you homestead the property. If you qualify for a homestead exemption, in most cases you do. If you're a Florida resident and you reside in the house as your principal residence, you're looking at about $153 a month in taxes. Homeowners insurance probably going to run you about $55 a month. That's a house without a pool, by the way. And then of course you're going to have private mortgage insurance, which is something if you don't put down 20% you're going to have to pay. I figured it out. I figured it at about 1% of the purchase price. You're looking at about $121 a month. Total payment now, your total payment's $1,116 a month, and you own it. Not to mention right now you can still in most cases write off your property taxes and your mortgage insurance throughout the year. So really the true cost is a lot less than that. Now let's look at something else. What if you're going to go VA? If you qualify for a VA loan, you can get into a home with no money down. In most cases, you can get the seller to pay all your closing costs. And those last figures didn't include closing costs, but you can always negotiate for the seller to pay that. But let's go with a VA type scenario. If you have a purchase price of $150,000, you don't have to put any money down, but the VA, the Veterans Administration, is going to charge you a VA funding fee. First time users pay 2.2% of the purchase price. Okay? So what's going to happen is you're putting no money down on a VA loan. That brings your mortgage amount to $153,300. Okay? Your monthly principal and interest is going to be about $726. Incredible, I know. This is with no money down, out the door here. Your taxes are going to be about the same if you homesteaded, about $153 a month. And then you got homeowners insurance of about $55. Again, that's a house without, you know, vicious dogs and pools and things like that. That makes your payment $934 a month. Can you see how it's better to own? And again, in most cases, if you qualify at the end of the year, you can write off your mortgage insurance and your taxes and things like that. So you can live in your home, VA, $934 a month. You can go FHA with only 3.5% down for about $1,016 a month, when the rent for the same type of house is $1,000, $1,200 or more. You tell me, is it cheaper to own or buy?